Taxes in Canada for non-residents. Income tax. There are special rules for the preparation of income taxes for non-residents of Canada versus residents. Doing your taxes is easy, but a lack of understanding about the many rules and differences between these by the tax preparer can cause you issues. Depending on the type of work that you do in Canada, there are many different special rules. At this time, we will be focusing on the temporary agricultural workers only. The workers from Mexico, Jamaica, Barbados, as well as Trinidad and Tobago are considered non-residents by law. It does not matter if they work for more than 6 months in Canada. These countries have a tax treaty with Canada as they are part of the SAWP program. For workers of other countries, we need to find out if there is a tax treaty with Canada, and it needs to be examined before filing your taxes. Your boss is required to withhold the following from your paycheck: income tax, CPP, Canada Pension Plan, or QPP, Quebec Pension Plan for those working in that specific province, EI, employment insurance, rent for housing, medical insurance. Any other deductions on your pay must be approved by you in written form. Did you know your employer contributes the same amount you do towards your pension? If on your T4 your CPP contribution is $200, your employer must contribute the same $200 by law. To do your income tax declaration, you need your social insurance number or SIN. You should receive it in one of the two formats shown here. It is important that you have a SIN number as it is where your pension contributions are registered. The number will always be the same and must be kept safe and confidential. The SIN numbers of the temporary agricultural workers of the SAWP program expire on December 15th of each year. The ones of workers from other temporary programs expire on the same date as the expiry on their work permit. All the SIN numbers start with the number 9. This indicates that the SIN is of a non-resident. The TD1 is a document that indicates what is the amount of income you can make tax-free, according to your dependents. For the temporary agricultural workers, the only acceptable dependent is a spouse or common law partner. Children are not acceptable dependents as they don't live in Canada with you. There are some exceptions for single parents with underage children. One of them may be included as a dependent up until they turn 18 years old. If you include your children in your income tax declaration and you also have your spouse as a dependent, the government can ask you for proof that your child lives and studies in Canada. An example of a TD1 for 2021. Each year, the amount of tax-free income you can earn changes. If you do not have a TD1, it is important that you save receipts of the money orders you send to your dependent for support. The receipt must clearly show your name and the name of your dependent as the beneficiary. The government does not check the amount being sent, but it must be an amount that legitimately shows that they are dependent on your support. This is an example of a TD1 for 2021. Each year, the amount of tax-free income you can earn changes. If you do not have a TD1, it is important that you save receipts of the money orders you send to your dependent for support. The receipt must clearly show your name and the name of your dependent as the beneficiary. The government does not check the amount being sent, but it must be an amount that legitimately shows they depend on you for support. The red arrow here shows the income that you as a temporary agricultural worker can make tax-free this year. The blue arrow shows that you have your spouse/partner as a dependent, and this amount is added to the income you can make tax-free. In 2021, a single, separated, or divorced person can make $13,808 tax-free. If you are married or common law and your spouse/partner depends on you, their $13,808 are added to the total income you can make tax-free, which is $27,616 for the year. If you do not exceed this income amount, you will get back the withheld tax as a refund. It is important to mention that there are also provincial taxes, and the limits to the tax-free income amounts is lower than the federal taxes. Make sure to check your provincial TD1 to learn more about these limits. The T4 is a document that all employers are required to give a copy of to their employees and to the government, where it indicates how much income they earned and what deductions were made. It is with this information that your taxes will be prepared with. Your employer must, by law, generate the T4 in February of the year after you worked. For example, the T4 for 2021 is sent to the government February 2022. Your income tax cannot be submitted to the government for processing until March of next year, March 2022 for 2021 taxes. You can choose whoever you wish to prepare and file your taxes for you. We suggest that you choose carefully. There are people out there that will take advantage of your lack of understanding about the laws and tax process to steal all or parts of your refund without you noticing. What's worse, they can file your taxes for you as a Canadian resident to receive more funds on the tax refund that you are not eligible for benefits. All these while charging an excessive amount for this service, but the government will make you pay that back to them with interest and fines. The Government of Canada has the right to review your past filed taxes to verify that there are no mistakes or false claims. Remember, the government does not give free money. Remember that your income tax declaration is a tax return to the Government of Canada. They will not give you more than what they took in taxes. If they took $1,000 and you did not exceed your tax-free limit, as we saw on the TD1, they will only send you a refund for $1,000. If you are refunded more than what you paid in, your income tax declaration has more than likely been filed as a resident and will most likely cause you issues in the future. The purple arrow here shows the amount to pay back to the Government of Canada after a fraudulent tax return was filed as a resident for a non-resident. This is one of the most common frauds that the temporary agricultural workers can fall prey to. Their tax preparer files their income tax as a resident, and this causes them to start receiving benefits that as a non-resident you are unfortunately not eligible for. In this example of a defrauded person, we can see by the purple arrow how the government at the time of revision removed this benefit and changed it to zero. There is also an interest charged by the green arrow, and it leaves a debt to be paid by the blue arrow. To receive your income tax refund, there are two options. Check, made out to the name of the temporary agricultural worker and can only be cashed by them, or direct deposit to a bank account at a Canadian bank. Another situation that tends to happen is that you may not know where your refund was deposited to. Whenever you or your employer opens a bank account for you in Canada, make sure to write the account number down. Do not throw away or lose your bank card, even if you think you may not need it. Make sure to know your PIN number in a safe place you will remember. If you lose or forget your PIN, you can only get it reset by visiting the bank branch in person. It cannot be done over the phone. If you wish for the Government of Canada to deposit your tax refund directly to your bank account, just take your SIN number to your bank and request for them to sign you up for CRA direct deposit. It is much safer and quicker to receive your tax refund as a deposit than a check. As we previously learned, your employer generates your T4 in February and your income tax declaration is submitted in March via mail to the government. If your tax is completed in 15 days or less, it was also most likely filed improperly. In many of these cases, the tax preparer that filed your income tax in this manner receives a check for your provincial benefits without you knowing, and they keep the funds for themselves. The government can take up to 6 months to finish your income tax declaration. Only once this time has passed can you submit a complaint to see what the delay is. This does not apply to delays caused by COVID-19. Once the government has finished processing your income tax declaration, they will send to the address registered to your profile a document called a Notice of Assessment. This document indicates how your income tax is calculated to see if you will pay or get a refund. The notice of assessment is the proof that you filed your income taxes for that year. This document is legally yours and you cannot be charged or denied to have it. The check that the government sends has your name and address and can only be cashed by you. These checks do not expire and can be cashed even years later, but only in Canada. It might be difficult to cash these checks internationally. The amount of the check is on the check itself and the stub attached to it. On this part of the notice of assessment, you can see the last four digits of your SIN number, yellow arrow, year of income tax declaration, blue arrow, tax withheld by the employer, pink arrow, amount of refund, CR, or amount to be paid, DR, by the red arrow. They will also include how it was calculated that you get a refund or pay. The amount of the refund should coincide with the amount of the check. This is an example of a notice of assessment, when the government does direct deposit to a Canadian bank account rather than a check. Deposit amount by the red arrow, deposited to a bank account by the green arrow. It is very important that you always know what Canadian bank and the account number you use for your tax direct deposit. When you apply for parental benefits, it is very important that your income taxes are submitted to the Government of Canada at the very latest by June of the year after you receive the benefits. For example, if you receive parental benefits during 2021, the limit of time to submit your income tax is June 2022. If you do not file your taxes by then, it will generate a debt that the government does not exempt anyone from paying.